Ethereum's uncapped supply. That's going to be the topic of this morning's video. Good morning, everybody. Now, I just want to start by saying I am extremely bullish on Ethereum. I think it's an amazing project. I like it very, very much. That's just my personal opinion. Please do your own research. However, there is a little worm that is niggling in the woodpile, and I'd like to expose that and just talk about the potential problem of the uncapped supply of Ethereum. We're going to go through it step by step and talk about how it's evolved and what has happened with Ethereum and what is currently happening, and is there any end to the supply. Unlike Bitcoin, Bitcoin has a capped supply of 21 million. We know that there will never be more than 21 million Bitcoins. So if you own a Bitcoin, you can rest assured that you own 1/21 millionth of the Bitcoin economy. Probably more, because we know that there's a lot of lost Bitcoins. So that gives you some security that the token or the cryptocurrency that you are holding is scarce. However, the same is not true with Ethereum. Let's break it down and go through it step by step. Now, Ethereum was launched on the 30th of July 2015, and there were already 72 million pre-mined coins. So that's substantially more than the total amount of Bitcoins that will ever be in existence. At that time, their mining reward was 5 Ethereum per block. Now, Bitcoin has a block, and it has a block time of 10 minutes. So it is reasonably slow. Ethereum, on the other hand, has a block time of 15 seconds. It's actually closer to 14 seconds, but for argument's sake, let's work it on 15 seconds. Every 15 seconds, miners get rewarded 5 Ethereum. So as you can see, there's a lot more Ethereum being put into the system every day than there are Bitcoin. But we'll get into that a little bit more later on. On the 16th of October 2017, Ethereum had an upgrade by Xantium, and this reduced the mining reward from 5 to 3. Once again, every 15 seconds, we get 3 new Ethereum that are printed and that are pushed into the Ethereum ecosystem. On the 28th of February 2019, which is the latest drop, the mining reward drops from 3 Ethereum every 15 seconds to 2. This was dubbed the third inning, and it has taken place. So now we're in a situation where every 15 seconds we have 2 Ethereum. Now, as I said, each block takes 15 seconds. Every 15 seconds, an additional 2 Ethereum are pushed into the ecosystem. We currently have 108 million Ethereum that are in existence, and that is as of the 19th of November. We have about 13,500 Ethereum being mined per day. So if we just take the current price, which is around about $186, and we times it by the amount of Ethereum, 108 million, we get a market cap of $20 billion US. Now that in itself is very, very impressive. $20 billion US. I just want to go out of here and let's have a look at this. Here's a chart that shows you how many Ethereum are being produced every day. And as you can see from this latest upgrade, you can see the figure there at the top, 13,699. And as I scroll on, this is a chart that monitors the daily production of Ethereum. Just a handy tool that you might want to know about. Let's have a look at CoinMarketCap to have a look at Ethereum. Now, Ethereum has a market cap, as I said, of 20 billion. It is number 2 on CoinMarketCap. And the next competitor has a market cap of 11 billion, which is Ripple. So is this a problem? Is inflation a problem for Ethereum or for cryptocurrencies in general? We know Bitcoin has some challenges because once the 21 million Bitcoin are eventually minted, we are relying on the fact that network fees are going to be enough of a incentive for miners to continue and to produce the blocks and mine Bitcoin. However, with Ethereum, it is not a situation like that. Miners are incentivized with 2, and at this stage, we are looking at a change in the Ethereum blockchain. This could happen as soon as the first quarter in 2020, which is really just a couple of months away. What is going to happen is Ethereum is going to go from proof of work to proof of stake. In other words, no longer mined, but stakers will have the ability to process the blocks. Couple of things here. First of all, you are going to need 32 Ethereum to stake. So if you're interested in passive income and you want to make some money by simply holding Ethereum, I would suggest that you start considering just getting your portfolio up to at least 32 Ethereum, because that's what's going to be needed if you are going to stake. Now, we don't know the full details of what is going to be required to stake, but the rewards are going to be poor at best. You're not going to get more than 10% per annum for staking your coins. If you compare that to traditional banking, it's a reasonably good return. If you compare it to what we're used to making with cryptocurrencies, it is a very mild return. Now, whether you're going to have to run a full node or not to a stake, and it looks like from what I've read and the research that I've done, you are going to be expected to run a full Ethereum node. It will mean that it'll probably not be profitable. But I will make another video and I will keep everyone updated on whether or not it is profitable to stake Ethereum. Ethereum will move from proof of work, mining, to proof of stake, which is going to be a massive change and something that we can look forward to. So in conclusion, is it a concern that Ethereum is being produced at a rate of 13,500 coins per day with no end in sight? I'm going to say that it is at this stage not something that I am terribly concerned about. Remember, Bitcoin, every day we are having 1,800 Bitcoin produced. The value of that Bitcoin is about 15 million US dollars, closer to 16 million US dollars. With the Ethereum and the 13,500 Ethereum that we are having produced every day, the value of that is around about 2.5 million US dollars. So it is substantially less than Bitcoin. However, with Bitcoin, we have a clear indication of when this will be ending and what we can expect as far as inflation goes in the future. With Ethereum, we do not. However, the reason I say it's not a bad thing is because Ethereum is number 2 on CoinMarketCap. It has the most developers, more developers than any other of the coins that support smart contracts and so on. It is number 2. It is the first mover advantage, and it is progressing with a lot of very useful projects that are currently based on Ethereum. Now, I do realize that it is possible to move these projects to Tron or EOS or any of the competing networks. However, it is not simple to move them because there's a lot of people that will have to agree and that will have to accept the move and will have to onboard it if it were to take place. I love Ethereum. I think it is an amazing project. I think there's a lot of hope. Slightly concerned about the fact that there is no fixed supply. However, as I'll say again, in conclusion, I don't think it's a problem, but I do think it is something we need to keep a careful eye on. That's it from me, guys. If you find value in my content, if you like my videos, please subscribe to my channel.